And welcome back. Well, did you know that September is Life Insurance Awareness Month? Nobody expects the worst to happen, but if it does, it's comforting to know that your family will be protected.
And joining us now is Matthew Holbrook from Country Financial. Matthew's here to tell you why having this type of coverage is something every family needs. All in caps. Everybody needs this. Every family's got to have this.
Yes.
So we gave this like crazy example that I want you to explain again, and I'm going to answer it. And I don't know if I'm going to come up with the right answer or not.
Okay. So for that, what I say when people say, "Why do I need my own policy outside of work?" and you see people insuring their homes, their cars, even their dogs. Some people do. We do that actually. But they.
What does that mean? You get a new dog if your dog passes?
No, for that. Well, if something happens, they pay the the vet bills. Yes. Now we're way off topic.
Health insurance is weird fact.
God. So
I thought it was life insurance.
Okay, so where were we? For that, people insure their homes, their cars, their dogs even, but they don't insure themselves. And what I mean by that, imagine you do have that example you guys talked about where you have the ATM and you have the car and you can only insure one. Every month that ATM gives you $5,000. Now, which one would you guys insure?
The ATM.
The ATM.
It pays you.
Absolutely. So you guys are those ATMs. Each month you guys get that money coming in, but a lot of people choose to insure the cars over themselves outside of that. And a lot of plans only do about 2 times the salary.
The
ATM.
The ATM should be the right
because
answer.
It pays you.
Because it pays you. So every month when you look at your salary, that's something paid to you. You can do whatever you want with that money. With your car, say that goes to down the drain, you can buy a new car. You can't replace yourself for that. So in a lot of employer plans, they pay about 2 times the salary. So that's not going to go a long way when you look at the grand scheme of things.
So how do you figure out how much you should have on yourself when you're, what if you're not giving yourself $5 grand a month?
So I'll give you an example here. Say you have a family, a couple 35-year-olds. The mom is the only one working. The dad's a stay-at-home dad, 2 little kids running around the house, and mom makes $100,000 a year. So for that, between 35 and 65, she's going to make about $3 million over that time, and that's not taking into account raises and things like that. So when you look at, say, a plan through the employer, 2 times the salary, $200,000 compared to $3 million, I mean, that $200,000 is not going to go a long way. If something should, God forbid, happen to that mom, the dad's going to have to go back to work. We're going to have to factor in daycare, which can be as high as, what, $2,500 a month?
Yeah.
And so that $200,000 may seem like a lot today, but when you look at the grand scheme of things, it's really not. So people need to supplement that and have something including with that policy.
Do you go over this slower with people too?
I do, but I only have 5-6 minutes here, so I'm trying to talk
fast. So we got to go through it fast.
So DVR, rewind a little bit.
It's like,
because it's a lot to take in. Even like the example that you were talking about with the car and the ATM. I mean, I'm still sort of processing that. And that's the thing that I think is so important about sitting down and meeting with you is because you can go over how much life insurance somebody needs and why it's so important for a family to have that coverage.
And the big thing I want people to realize is just that the need is there and that they need to talk to somebody like me because, what is it, about 60% of families in the U.S. don't have a personally owned policy. So it is a problem.
Well, and a lot of people are torn between what they know, the word is whole life insurance versus term. And at what age you need which one and which one's actually better for you kind of thing. You help people sort that out too, right?
Yes, and for that, that's something when you're in my office, I can kind of explain a little bit more deeper and kind of find out what the need is for the client. But an easy way to think of it is term insurance. Think of you're renting an apartment. When you rent an apartment, you're not really making any money or building any equity, okay? So you still need a place to live, but it's cheaper to rent, okay? So with whole life policies, with that, it's more expensive, but you're building equity. So with that, you're building kind of these cash accounts. Say by age 65, you can even use those cash accounts for retirement or kind of along the way, you can use that money at any time. So it builds kind of a savings account within the
like
whole
owning
life.
a home.
Exactly. So it builds equity that you have access to at any time. But again, that is more expensive. So a lot of people with the budget, when we kind of figured out we'll do a mix of the two or just standard term or just standard whole life.
Do you think people who are married versus single need different kinds of things with life insurance as well?
Yeah, and I've some people come in that say, well, I don't really need to leave my kids any money or things like that. Well, the other person in the relationship, should something happen to you, still needs that benefit should something happen to you.
Quickly, because we have just a minute, DIME is an acronym that you use, and this is something that you use to help explain this. So it's the D is for death, I income, M mortgage, and E education. Yep,
and for that, those are all the needs that a person would have. So we kind of figure out what all those numbers would be, add those all up, and that's your total need. So if people want to look at that and kind of figure it out, that's the easiest way probably to just do it in a few seconds.
But people can come in and sit down with you,
That's
go
the
over
easiest way. I'd rather look at it before they try to figure it out on their own.
Yeah.
help them out.
Yeah.
Well, I think it's nice because when people meet with you too, they don't. You can ask the questions. You don't feel dumb. You'll slow it down. You'll really break things down for people and go through it at their own pace.
And I don't charge an hourly fee, so it's not like we're going to try to talk super fast while they're there.
Okay.
They can come as many times as they want.
That's cute and important, I think, Matthew. People can get in touch with you by calling and making an appointment. It doesn't cost anything to sit down with you and discuss these things, right? Whether it's insurance or your financial situation. But insurance is really important, that safe and secure aspect of it. You can reach Matthew Holbrook. He's with Country Financial by calling 414-332-2137. You can also email him. A lot of times I think people are more comfortable with that. It's matthew.holbrook@countryfinancial.com.
Yeah.
Thanks,
you.
Matthew.
Long email address.
Yeah.
Yeah. That's okay.